Hello traders, the title of this video is FS Euro Australian Dollar Trader gives FS trading tips for 2017. Let's get started. We're on a yearly chart, as you can see, looking at the candlestick bar on the yearly chart of the Euro Australian Dollar. You can see that the price went up, okay, up to this point. If you pay attention to the candlestick bars here, those one here, you see those one with the shadow on top. You see the shadow on top of those two candlestick bar here. This is indicating to us that there were orders here to sell. So there was a distribution in this zone. All right, so price went up and now we see a shadow here to sell. So the price, in our view, is changing direction. So it was bullish first, now people sold it here, now it's coming down. All right, so now the question is, how far will it go down? That is the question. I want to point out on this yearly chart one support level. That support level is the low of 2015. That low is at 13679. Okay, going to color it into green. 13679. Hold on, please. 13679. One 13679. It's not changing. Okay, just remember that this is 13679. There's a support there on the yearly chart. So as the price is going down after those shadow here, we need to remember the low of 2015 at 13679. Okay. Well, that's all I can say on the yearly chart. So that level of 13679 is a very important support level. As the price going down, the price looking for a better support level. Going to the monthly charts. All right, here we are on the monthly chart. I want you to understand that you can see that the price rally up very fast in this session here. If you apply Fibonacci extension to this price action here, you see this session here, the last move up, you can see that the price after breaking above the previous high, talking about this one here, previous high, the price found a resistance. We at which level? At 138.2%, Fibonacci extension level of this price move, here. If you apply Fibonacci extension to it, price breaks above the prior high. The next challenge for the bullish progression is 138.2% Fibonacci extension level. That's where you find a resistance now. Now it's coming down 1, 2. All right, so it formed a double bottom here. You see, this is another confusion for earlier wave traders because it came down 1, 2. Now, if you call this one free, it's not good because it formed a double bottom chart pattern here. So therefore, we'll say 1, 2 because the double bottom here. All this session up, down, up is 2. So 1, 2, 3. Should we call this one 4? Maybe. All right, 4, 5 is coming down. All right. But there is a support on the edge of the red trend line here. What we have done, we draw a trend line first, connecting this point and this point here. We draw the first line and we choose one point, as I've done it before, and applying market geometry. As soon as the price is out of a channel, we project in the direction of the price, bringing us to this red trend line here. So, as I show you on the yearly chart, the euro dollar was sold. All right, remember the shadow on top of the candlestick bar now is coming down. So price going down, price looking for a better support level. We talk about 13679, the low of 2015. We must remember that key level. All right, very important. That's the green line here. All right, But also there is this trend line here, which is the projection of our first channel. So the intersection between the 136, call it 13700, between the 13700 and the bearish and this bullish trend line is a hot spot trading zone. It will be better for the euro Australian dollar to continue to go down and to revisit the level of 13700. All right, so this is normal for it to push it back near the zone, and as soon as it reaches that level, we must monitor the reaction of the price in this zone to see whether there is an opportunity to buy or sell. Look for bullish chart pattern, look for candlestick pattern near the 13700. All right, look for reversal pattern in this zone, and then implement a top-down trading method to trade it. But as I've been saying a long time before, the current market pattern will determine the appropriate strategy that we must deploy. Okay. So right now the price is in a declining channel. If I draw it like this, just choosing this point here and drawing a line that is parallel. Just choosing this point here and drawing a line that is parallel to this one here. We can see that the price is in a declining channel. All right, it's in a declining channel right now. So the strategy is that professional, as the price going down, looking for a better support level. This is the median line of our green channel going down. So if it comes down near 137, which we will prefer, it can stop here right now, but we will prefer it to continue to go down more to 13700 zone to retest that support level. So you may see the reaction on the edge of that red trend line. That's very important for me personally. All right, really have even if it pierces through it, have a tail, and then that will be good, a long tail, and then close above it, which will form a candlestick pattern. That means a candlestick bar with a long tail piercing through, all right, a key level, 13700. That will be a beautiful bullish trading setup for us if that is the case here, which means this candlestick bar going all the way through 13700 with a long tail and then closing up above it. That's nice. It means that it finds supports in that zone. But will it do that? Okay, hopefully. It may not. But the way things stand now, because this candlestick bar is already bearish, it looks to me it will be nicer if you push it just to touch it, boom, like that. And then next month, beginning of March, so very important for this candlestick bar to close first before we can attempt to buy it. Right now, do not attempt to buy it unless you are day trading. All right. But for swing trading and position trading purposes, it will be better for this monthly candlestick bar to close. Okay. And then we know exactly, we can analyze the price structure, okay, near the 13700 level. All right. Another thing that I will personally prefer, because of this move, which is quite shallow here, I would prefer it after it reaches 13700, I would prefer it to bounce up a bit. Or something like this. Hold on, please. I'm trying not to move my line. To bounce up a bit. One more time. To bounce up a bit. And to come down again. Alright? I would prefer that before going up. Alright? I would prefer it to bounce up between. Those who are selling will come out first. And then we will try to go up first. And then see how people are going to sell it this time. Alright? So this move down is just to monitor whether there is still a demand to sell the euro Australian dollar. It's just to verify whether they are quite enthusiastic to sell it again one more time. Because as you can see those two candlesticks by here, they are quite happy to sell the euro Australian dollar. So by attempting to buy near the 13700 with those bearish candlestick bar, it's a little bit risky. Therefore, personally, I'll prefer it to bounce up again. And then we want to keep our eyes on the chart and see, are they going to sell it as they did before? So if they are struggling to sell it the one more time and it did below 13700 and find a support, then we'll know that there is not much demand to sell it again. All right, that's what myself I would prefer. But remember that the price going down now, there's a support at 13700 on the edge of the projected channel. All right, if you reach that level, all right, we will implement a top-down trading method to see whether there will be a bullish signal or not. But if he breaks below 13700 and find a resistance, well, we'll continue to sell it down. All right, one more time, if the price is out of our second channel, you see this one, this channel, if it's come out of it, well, we will project it one more time using market geometry to determine possible reversal point. So if you are new to us, watching this video for the first time, and you are wondering what is market geometry, what is 138.2% Fibonacci extension level, you need to go subscribe to Day Pro Trader YouTube channel so you may know more about market geometry and how we use the 138.2% Fibonacci extension level. So if it's out of the second channel, well, game on. We just project the channel one more time, and then we will draw again a median line of that channel, and in order to determine the possible reversal point. All right. Remember, it's coming down. There's a support at 13700 zone near the low of 2015. All right. In all cases, we are looking for trading setup, and then we implement a top-down trading method to trade it like a pro. There are two more key levels that I want to mention to traders today. The first one is the first long-term equilibrium price level for the Euro Australian dollar. The first long-term equilibrium price level for the Euro dollar in 2017 is at 145.60. 145.60. One should not forget that level throughout 2017. You can forget any other level, but do not forget 145.60. Note it down. And remember that key level because it is one of the most influential key level for the Euro Australian dollar, 145.60. The current short-term equilibrium price level for the Euro Australian dollar is at 143.25. 143.25. That's the current short-term equilibrium price level. Here it is. That's the turquoise line here at 143.25. We'll monitor that level up to the end of February 2017 until we have a new short-term equilibrium price level. All right, so do not forget 145.60 and up to the end of February, do not forget 143.25. All right. Apart from those two key levels, we also have the level of 136.79, the low of 2015. Now the price out of the first channel, we project, now we are in the second channel, it's coming near the edge of that second channel. The intersection between 137.00 and the red trend line is a hot spot trading zone. We want to monitor the reaction of the price there. Personally, I would prefer it to bounce up a bit and probably, if everything is fine, to return to see how they're going to sell it one more time. I would prefer that. But don't be surprised, all right? If you just bounce up here and start going up, okay? Don't be surprised. All right? If you go to the weekly chart, there's not much to say. All we can say is that it's still in a declining channel. All right, you see the declining channel, the green declining channel, which will determine the appropriate strategy that we must deploy. So if one is buying near the 137.00, one should be very, very gentle because why? The market pattern is still bearish. So it's a contra trend that we are taking at a support level. Though it's in a declining channel, it has reached a key support level. We need to be very gentle, but do not forget that the current market pattern is a declining channel. If you find a support here, you bounce up near the edge. Personally, I prefer it to come back down one more time to see how they are selling it, and that will give us a confirmation that the bearish momentum is dissipating. Remember, before I close this video, very, very important point I want to make now, all right, is that all we have discussed now is technical analysis. Decisions that are made by the Federal Reserve, Central Bank in Europe, in Australia, will affect this currency pair. So don't be surprised tomorrow they change their monetary policy and boom, you see a long candlestick up, a long candlestick up. All right. So this is why we say to Forex trader, one cannot trade Forex with the technical analysis alone. Decisions that are made by the central bank, the economy news at Forex Factory will definitely influence the technical analysis. Otherwise, one will be going round as decisions are made, and the hedge fund, the big financial institution, are combining the technical analysis and the fundamental. If you do not do exactly the same thing, you will be going round. All right? I hope you have found this video also useful, all right? And we'll put it into use, okay, to make excellent FX trading decisions. Before we close this video, I want to mention one very important key level. Is this level here at 14230. That key level, I forget it before, is the 50% Fibonacci retracement level of this price action from here. All right. All right. The level of 14230 is the 50% Fibonacci retracement level of this move down, this one. So what I need to add is that as long as we are stuck below that level of 14230, if one is buying, one should be very, very careful. All right? So, as I'm saying to you, if you receive a buy signal at 13700 and you buy, and the price is coming up near 13230, be ready, okay, to secure your gain and know that there is a resistance there. Because as long as we are stuck below 14230, which is the 50% Fibonacci retracement level, or this move down, professional bearish trader will be willing to sell the Euro Australian dollar because it's still in a bearish zone. Thank you for watching, and I'll speak to you soon. If you have any question or suggestion, put in the comment section, and in due course, I will be busy recording another video to answer your specific question. We are the TSTW24 traders talking about FS Euro Australian dollar trader gives FS trading tips for 2017. Speak to you soon.